Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF Conference. And I'm here with Jillian DelSignore, who's head of ETF distribution at JP Morgan. Jillian, great seeing you.
You as well. It's always fun to be down in Florida this time of year.
It is for sure. Well, you guys had a big year last year, a lot of growth, but you spent a lot of time talking to advisors. What did you learn, and how has that changed your direction or identify what you focused on for 17?
Absolutely. It was an incredible year. We're incredibly proud. We crossed over $1 billion in assets for the first time and just feel a lot of momentum, and did have a lot of conversations with advisors. And what we were consistently hearing was they were looking for products and investment solutions that helped manage for volatility and increase diversification in their portfolios. And so we had a lot of very productive conversations around how the way that JP Morgan has approached the multi-factor ETF space could really solve for that volatility problem, help keep their clients invested despite volatility that we certainly did experience and will continue to experience, I believe, moving into 2017.
Absolutely. So let's talk specifically about what are some strategies, based on the way we're looking down the tunnel right now. We may have some volatility. There's threat of rising rates, there's concern about global disruption. What are some things that advisors need to be thinking about?
Honestly, I think what we've been doing within the multi-factor space has been very compelling, and advisors have really gravitated towards it for that volatility dampening component. I think what's unique is that we're taking both portfolio construction, diversifying away risk you're not necessarily rewarded for taking, as well as factor-based investing into our strategy. So that has actually served to be a really nice volatility dampener for advisors as they're trying to keep clients invested. If we take it one step further, as advisors are talking to us about diversification needs, we've actually been able to really leverage the research at JP Morgan and take essentially our hedge fund strategy into an ETF structure. So we've created JPHF, which is direct access to hedge fund exposures inside of an ETF vehicle.
Yeah, this is amazing because really you've got access to the biggest hedge fund managers in the world, and you're pinpointing or highlighting what they're all kind of have some consensus. And if a bunch of the best managers in the world are buying the same stock, then this in fact will be a part of this ETF, correct?
So essentially what we're doing with JPHF is you're getting access to 3 different types of hedge fund exposures. You're getting global macro, you're getting event-driven, and you're getting long-short equity.
Yeah. And
to be able to capture those direct hedge fund exposures into a liquid ETF vehicle, we really do believe is groundbreaking. We've been able to really democratize access to hedge funds for all investors. So you're able to really diversify your portfolio in a way you never had been able to do before in a liquid format.
Absolutely, and alternative investing really hasn't been that popular the last 5 years while we had a bull market in stocks and bonds, but smart advisors are saying, hey, something's got to give at one point, and we need to be prepared, so that's a great strategy.
Absolutely. The conversations with advisors have really picked up as they clearly recognize that that's the case, and they're looking for something that's actually going to deliver on what it is they're trying to use alternative investing for.
Absolutely. Great. Jillian, as always, great seeing you.
You too, Tom. Thank you.